Hi, welcome to my webinar. I've just finished an hour long. If you didn't manage to see it, I'm posting it now on YouTube. Hope you find all the analysis and trade ideas useful. We've got CPI out in 25 minutes, so hopefully I should have this processed before the number comes out today on Tuesday, the 14th of November. One thing I wanted to show you, everyone in the webinar, I gave them a special offer. A 20% discount on this subscription. If you like what I do, if you like what you see in the webinar, if you want my daily signals, if you want to earn while you learn all my techniques, which I will teach you with the subscription, then I want you to be able to take advantage of this as well. As I say, it's a 20% discount. This discount is only available for 48 hours. So you've got to move quickly. There you can see, go to Day Trade Ideas, you'll see this on the home page, but if you want the whole URL, there you go, daytradeideas.co.uk/product/FX signals. Go there now and grab this. If you sign up now, you get 20% off for the life of the subscription. So every month you pay 20% less than you would otherwise have done. Okay, please leave your comments in the comments box and your questions, and I will get back to you as soon as I can. I'll stick it on YouTube afterwards, so that if you can go back over it. Okay, so trade sheet. I'm going to start with gold. Gold. Where is it? Here we go. Okay, I'm going to look at the daily chart to start with. Just let me move that over a bit. Yeah, that works. Okay, so gold really is tough. I'm sure you've seen a few of my webinars lately, and I'm basically focused on the longer term. I'm focused on what is probably a triple top pattern, but of course it's been built up over 3 years, so it's such a big pattern. It's going to take years for it to play out if it is indeed a triple top pattern, and it could be. I should probably have a trend line on here as well. There we go. I think I probably do on my weekly chart. Just let me have a look. So this is my weekly chart. There we go. So it's kind of a triple top within the context of, you know, when you look at it on a weekly chart, it could just be a channel. It just could be this enormous, oh, hang on, that's not right at all. I need to go much further back. There we go. So yeah, this is the weekly chart going back to 2009. Where am I? No, hang on, that's not right. That's not gold at all. 1 second, I thought that didn't look right. Okay, listen, I'm just going to stick with what I've got on the screen now. Right, there's your daily chart, and that goes back to 2020, and that's your triple top. Okay, let's move along. So we're on the daily chart now. When we zoom into sort of what's been going on this year, we had a big move to the downside. We've had a decent recovery, but I'm struggling to get a trend that I can actually jump on. We had a decent recovery, all looked pretty good, and then of course the market reversed. Where does gold go now? I had a support level, and it was a bit of a risky call. I wasn't sure about it, but I chose the 1933, 1930 area because it's a 38.2% fib of that very fast run-up. Now, that run-up was triggered by the Middle East troubles with the Hamas attack, and it did push up gold significantly. Well, actually, it pushed gold up $200, so that was an enormous run. We had a correction to the downside. I don't think it's reacting now to the Middle East, to the Israeli issue there, but we had a 38.2% fib, a 200-day moving average, a 100-day moving average. Now you see that they flatlined. The 200, even the 200 and the 100 have flatlined since the beginning of October, and that just emphasizes the fact that gold has been in this longer-term sideways range, and it's such a struggle in these markets. And actually, I'm going to say that I'm quite good at gold signals because we have had so many winners, and I don't. Maybe it's more luck than judgment because this is so hard to read. But anyway, we had another great trade, which I feel lucky about. We bounced off 1933, 1930. We've held up 100 and the 200-day moving averages, so we're in a recovery phase. We got oversold on the downside as well, which was another good reason. Short-term charts on the 4-hour chart, we also did have some moving average support just a little bit below 1930, so I took a gamble. So for now, it looks like we're going to recover. Nothing really candle-wise on the daily chart to suggest we're going to have anything more than just a bounce in what's probably a bear trend. The 1 hour chart is working quite well at the moment, kind of something I do focus on when I have a trendless longer term market. And just the fibs alone, I had 1945, 1950 as my first target for the bounce in gold. And the reason for that was just the fib level and the 100-hour moving average. There isn't anything on the 4 hour chart particularly of note, but I am going to go to that in a minute. So right now, 1945, 1950 is key. We're hovering there just before the release of the CPI, the US CPI number, which is coming out in just under an hour and a half. That's obviously going to be the driver for the day. It probably is the most important number of the month. At the moment, it used to be the unemployment number. I'd say that's probably the second most important, or maybe even the third, because PPI, PCE, all these inflation numbers are so important because everything hinges on what the Fed are going to do with interest rates. So we start breaking up through 1950. We could get to this trend line here, 1956. You know, is that trend line particularly relevant? It is, because it's the neckline to what could have been a head and shoulders pattern. When you look at the hourly chart, that could have been the left shoulder. This could have been the head with a double top. And then we managed, actually, no. Do you know what? That isn't the case. I drew that trend line because I thought we might form another right shoulder. I don't think this counts as a right shoulder here. Can you see? My argument was going to be left shoulder, head, right shoulder, but this right shoulder is just not big enough. Anyway, so I'm actually going to take that trend line off now. I hadn't looked at that for a little while, for a few days. So I'm going to take that off. This head and shoulders was the one that we traded, and it worked really well. Left shoulder, head with a double top, came down, right shoulder. Then the break of 1975 was my sell signal, and that did work really well. If you got on that trade last week, well done, because we went all the way down to my ultimate target of 1933, 1930. We did have a couple of bounces which I tried to sell, but I think my levels weren't aggressive enough, were they, on this little bounce here? Can't quite remember. No, it wasn't. My level was 1968, 1972 or something. We didn't quite make that. So you'd have had to have just sold it at 1975 and run it all the way down. Okay, 1945, 1950. If we jump from there, we could get to 1960, 1963. I think that's probably a good resistance level. What have I got on my sheet? Yeah, I have got it. 1958, 1963 is my sell level if we continue up. I don't have 1945, 1950 is my sell level. I'm not confident enough that we'll turn around from there, and getting short of gold just before the CPI number is a crazy idea anyway. So I'd rather wait, and these are my two levels, 1933, 1930, 1958, 1963. We're bang in the middle of that at the moment. I can't really say any more right now because obviously longer term it's just too messy. Okay, so I've got a message from Eduardo. Could I go through a workflow when looking for a trade? Well, I'm kind of going to do that throughout the whole thing anyway. I'm going to look at my charts. I'm going to show you why I pick levels. I could add a little trend line here. I've just spotted this. Probably worth it. It's only on the hourly chart. No. I do that. I put the trend lines on and then I decide whether I like them or not. And I don't like that one. There's one here and I'm probably not going to like it either. No, it's just too steep. You can see we've broken above it and we are actually holding. If you were a really short-term scalper, you probably only need to look back to 6th of November. That's about a week's worth of data. And yeah, that looks positive enough. We're holding above the 50-hour moving average. It gives me confidence to be long, I guess. That's all I would say, and which is why I'm not shorting here at 45, 48. But that's not a strong enough trend line for me to do anything with myself. It's just a reason why I would be I'm happier to be long than short right now, but as I say, CPI could change all that. I am just going to show you, no I'm not, I was going to show you my 4-hour chart, but there's nothing particularly on there. Okay, I'm going to go straight on to WTI Crude, which I have been asked to look at anyway. If I go too fast, I tend to talk really quickly when I get into this. Then just tell me, hey, shut up, slow down, and I will. The daily chart for oil, again, really confusing. We were in this lovely bull trend up to sort of mid 2022. Then we had a nice bear trend, which wasn't easy to trade because it was very choppy indeed. double bottom here. That was a beauty. I managed to get us to jump on that one, although this was confusing. Then we broke up. Okay, and really to isolate what's going on now from May is fairly confusing. I'm going to be honest, I don't have a good grip of the longer term view on oil. I can't even count this as a head and shoulders pattern because there just wasn't a big enough run up to it. So if you think that's a head and shoulders pattern, I don't think it is. I would disagree with you. Having said that, when we broke that trend line, we went down. Okay, what can I tell you? The daily chart just isn't giving me anything. That's the truth. I've got no idea what to do with oil when I look at that. So I go to the hourly chart. The 4-hour chart is actually quite confusing as well. So I'm just focusing on the hourly chart now, and all I'm really focused on is the recent down move. That's all I can use to try to trade. Now that goes back to the 27th of September. So yeah, we're looking at sort of 6-7 weeks worth of data, and I'm using that to try to get some scalping levels. Swing trading is a bit of a struggle at the moment, but I do have this 23.6% fib level, which is holding perfectly. 78.66 is the exact value of that. I'll just move out a bit just so you can see that more clearly. And it is also coinciding with this upper trend line that goes back to the 22nd of October, 20th of October, and the 200-hour moving average. So we have resistance at 78.66. Now, what did I put on my report today? Let me just go into my oil report. I'll go into the FX signals group. Just remind myself of what I wrote actually this morning, November the 14th. So December futures continue higher with a break above 77.90 yesterday to target strong resistance at 79.20, 79.70. We actually haven't got to 79.20. We only got to 78.66. So I was looking for something a little bit higher, probably because I expected the move to continue, and 78, I'm going to guess at 78.9, yeah, 79.20 was around here. Can you see that? That was actually sort of midday yesterday that I was looking for us to get there, and we just didn't get there. We just got held by the 78.60 area. I thought we could touch the 200-hour moving average in the trend line. That's why I had that in there at 79.20, 79.70. So I would have suggested a short if we got there. So, you know, maybe now I could suggest a short because actually the moving average in the trend line has come down to meet the 23.6% fib. Make of that what you will, but I definitely would suggest that oil has some resistance there now, and I don't think oil is going to be particularly affected by the CPI number. So yeah, I would suggest now if you're looking at oil, 78.50, 78.90 is the key area for today. That is the key resistance area. Where would I put my stop? That's going to be a bit tricky. I mean, this is just a guess, but probably 79.30, which does represent quite a nice risk-reward trade. If you're selling it around 78.60, 78.50, 78.80, stop above 79.30, something like that. It's a really small stop, and if the trade does work, whoever asked me about oil, then you could easily be looking at 77.20. So yeah, you know, I'm thinking you could risk 40, 50 pips to make maybe 130 pips. That would be the only trade that I could look at right now, and it's a reasonable risk reward. Someone's just asked me what my website is, so I'm just going to type that out for you. Oh yeah, if you want to take advantage of that offer, then my website is daytradeideas.co.uk. I'm just going to check the questions again before I move on to the next market. It's more how I line up confluence with trend lines. Okay, I'll try and do that. I am going to do that. I mean, you're going to see exactly how I line up confluence with trend lines, EMAs, and Fibonacci's to enter a trade. But obviously, I've only got an hour, so I can't go into enormous amounts of detail. Okay, what do I think of cable? Okay, two questions I'm going to address right now, so I don't get too behind. Cable, I'll look at for you right now. Where's cable? Cable's actually quite interesting, so that's a good question. The signals are the same as on WFYT. Okay, so yeah, I do put some signals out there for people who are on the forums for Greg Secker, We Fund You Trade. No, the signals that I put in my private group are are some of I do what I do is I put a selection of stuff that I give to my subscribers. I give you a couple of signals and some analysis on that free stuff, so you get a taste of what I do. I did post all the gold analysis on there last week, so I really hope that helped you and you made some money on that, because we basically sold the break and caught that $40 move, and then we caught the low and caught the big bounce. So I mean, I think you could have made you could have caught a whole $55 move in gold if you followed me last week on the free stuff. But no, I don't. Let me just show you what I do put in the signals group then, just so you know. So every morning you get the full gold, silver and oil analysis. I give you some comments. I give you my trade sheet. I give you some news often. Now, I didn't do this morning because I'd already done it on the weekend. But there we go. So here's what I normally do. Now, this is what I did on Sunday night. Sorry if you're a subscriber. I'm just going to let these charts load up. So I throw out a load of charts with all my lines, my Fibonacci lines, my trend lines, my moving averages, and I give some comments and I explain what I'm looking at, how I've set my charts up. And you can just see it. Charts and comments are all over the place. Sometimes I highlight candle formations. You know, I call it earn while you learn. I do try and teach you what I'm doing, and I know a lot of you value the charts that I send out there, and a lot of you ask me, hey, can you put a chart out for this market? So I do that. Sunday night I went through loads, and I've started labeling them as well with the patterns that I've got on them. So yeah, it's not just a pure signal service. It really is try and learn the patterns that I follow, the trend lines, the moving average, everything. I think as Eduardo said, the confluence and how I spot all the levels. Well, you're going to learn all of that in this service. Okay, enough of that. I'm sure that answers your question. So it's also different to the Telegram group. Yes. Okay. So sorry. One more thing before I move on. Telegram group with 702 subscribers. Again, is similar to what I give to the WFYT and those free groups. I tend to post the same kind of stuff. You probably get a little bit more in the free Telegram group. So I have posted some charts in here which I don't give to Greg's groups. So yeah, you do get a bit more free stuff in there, but you don't get the whole thing. It's just, you know, it's just to give you an idea of the full service and keep you guys interested. I like to give out some free stuff. Right, going back to cable, I need to go to the daily chart. Now, I've talked about this in some recent webinars. I'm going to talk quite quickly and push on because I've only got an hour and I really want to get through this. Now, this is why you need to look at weekly charts, longer term weekly charts, or even monthly charts. Now, actually, I need to do a bit of a shortcut on this, and no, hang on, just give me a sec. Okay. There we go. Right, there we go. This is what I'm trying to show you. Can you see that? I'm not sure if you can. Let me know if you can now see a weekly chart. Or are you still seeing the same? Are you still seeing the same one I did before? So hang on. Just want to make sure this is all working. This I'm going to put back to the daily chart. Right, I'm showing you a daily chart now, and now I'm showing you a weekly chart. Can you see the weekly chart? Anyone? Just let me know. Okay, I'm hoping you can see the weekly chart. I'm going to keep talking until someone says that they can't see the weekly chart. You can. Okay, terrific. Okay, weekly chart. So you can now see data going back to 2007. This is why you need to look at longer term charts, because the cable has been in this a decade and a half bear trend. I'm just keeping an eye on the chat so I make sure I'm just a daily chart. That's bloody annoying. Okay, in that case I'll have to go back to here, go to the weekly chart, and I'll draw it all in. So going back to 2007, Actually, do you know what? I'm going to go on the monthly chart. Right, even on the this cable. Yeah. Right, monthly chart. So I'm going to put all my fibs in here. This is a big reason why you need to look at longer term charts. So there's my fibs going back to 2008, the start of the global financial crisis. I'm going to put a second set of fibs on around the 61.8% fib. You probably know that I like to do that just to break the chart down. When I get a swing high around the 61.8, I like to put that on there. You can do that on your charts as well. Gives you some areas of confluence, but it also gives me some sub levels to look at. And look how nicely this one, they've all lined up quite well, haven't they? This second set of fibs here, if you can see, the 23.6% fib has lined up really nicely with some of these swing lows down there. So I've got confidence in that level, in those levels. Okay. Trend line, I'm going to take from that peak there at the 61.8. I'm going to join it to this peak here. That seems like a fairly obvious trend line. Then I'm going to open us up again. Now, can you see that this little bounce in the corner of the screen, which looks like nothing on the monthly chart, even when I put it on the weekly chart, it doesn't look all that exciting. Okay, when you even just go back to 2014, this it's just a little bounce in the bear trend. This is how you have to get a perspective, because if all you were looking at is data going back a year and a bit, you'd be thinking, wow, cable's in such a great bull trend. I want to make sure I keep buying this every time we dip. But on the grander scale of things, the 200-week moving average certainly acted as resistance, because we closed above it one week, but then collapsed back below the following week. We had the confluence of Fibonacci levels around the 129.00, 130.00 area as well, just above the 200-week moving average. And then we've got that great big trend line going back to, was it 2014 here? Yep, 2014. And the 500-week moving average just above it. There was so much going on in that 500 pip area, and we didn't even manage to test the trend line. We just basically failed at the fib levels and the 200-week moving average. So if you didn't know that, you'd be thinking, right, we're in a nice bull trend. I'm going to keep buying this on the dip. But if you were looking at the longer term charts, you'd be probably starting to get into a short position here, knowing that we're very likely to turn around and go down. So longer term, I think cable is in a bear trend. That's the whole point of what I'm trying to say. And even though we are holding some support here, and now we'll have a look at it on the daily chart in a minute, but on the weekly chart, yes, we have bounced off the 38.2% fib at 120.90 beautifully. 1, 2, 3, 4, 5, 6 weeks we've been hovering above that fib, and we're seeing a little bounce, but I don't have a lot of faith in this bounce. There isn't really anything on the weekly chart that suggests to me that this is more than a bounce in a bear trend. Slow stochastics at the bottom of the chart are starting to turn up, so we've unwound the oversold situation. We had a decent green candle 2 weeks ago, but no follow through, so that doesn't give me any particular confidence that this is going to continue higher. What am I seeing on the daily chart now? Switch to the daily chart. Moving average is flatlining a bit, because since March, basically, I mean, look, where we are now is the same area that we were in the middle of March. So we've gone up a bit and we've gone down a bit, but basically we've been trading sideways for about 6 months. So the moving averages on the daily chart are flatlining, but the 200 and the 500 have certainly acted as resistance, and that's also around the same area as the 100-hour weekly moving averages. So they're doing their job. If I was to put some fib levels on just this move to the downside, what have I got? Okay, so I've got some resistance around 124.50, just above that, the moving averages. We didn't even manage to get there. My best guess is that this is some sort of flag consolidation pattern, and that eventually we will break lower. I could be wrong, but you can see my thought process. It's not really a very good consolidation pattern. I suppose that trend line probably isn't relevant. Maybe I should just join these two peaks. Yeah, you know, is it a flag? I'm not really sure, but this doesn't look like anything particularly bullish to me. And in the context of the longer term bear trend, and even just the move down from July. I think it's probably a consolidation. We're holding below the 38.2% fib. We're holding the moving averages. Not much else I can say on that. Let's have a look at the hourly chart. Is there anything that I need to... Right, okay, so on the hourly chart, really, I'm just looking at this whole, what I've called a consolidation pattern. And I'm actually getting all my signals from pretty much the hourly chart, a little bit on the 4-hour chart. But right now, I am just focusing on the short-term charts to get my signals. You can see it's a mess. We came down to the 61.8% fib. Now, I have that actually. It's a good thing you asked me, Cable, because I have that trade. There we go, look. Cable, I had a buy at 122.10, 122.00. Now, that was at the end of last week, I think, wasn't it? Stopped below 21.80. We got to 21.84, so I got lucky on that. Why did I pick that as a level? Well, it was purely because of the 1-hour chart. We had this trend line from a channel, which I'm not really sure if it was relevant, but anyway, we tested it. So that's why I had my entry level at around 122.20, 122.00, wasn't it? Yeah, 122.20, 122.00. It wasn't, no, sorry, 122.10, 122.00. So I had a 10 pip entry point, and that was the reason. I had the 61.8% fib, I had 500-hour moving average, and I had the trend line. And this was the only time period that was giving me any clue to what I should do. So I picked that as a trade. I got lucky on it. We bounced nicely. We held above the stop. And if anyone's in that trade, I hope you are. I had a target of 122.50, 122.90. So we've got to the second target. We hadn't got there yesterday, had we? We've gone up a bit today. I actually haven't looked at it today. So if anyone's in that trade, today we've hit the second target. Yesterday we didn't even hit the first target, did we? No, when 22.80 we did. Okay, so today we've hit the second target. If anyone's still in that trade, let me know. Hoping you still are. And do I see any further upside? Well, I mean, now it's all down to the CPI number. So if you're still running that trade, be aware you're taking a risk. I don't know what's going to happen on CPI. The last few hours, we've obviously just been chopping backwards and forwards. If you've taken your profit, I think it's a wise thing to do. I can't complain. What's that? Up to 80 pips on that trade for risking 20, 30 pips maximum. I think that risk reward worked quite well in what is a very difficult market to pick a trade. And if you said to me, what would I do right now? I wouldn't have a clue. That's the honest truth. I don't know. Even if we didn't have the CPI number out right now, I think we're in no man's land. If we dipped again, we could get support around that area, 122.10, 122.00. Could be worth a try, especially as we're in a mostly sideways trending market. We could continue to do that. That's probably the only level that I would trade in, Cable. I hope that's helpful. Oh, you're in that trade. Cool. Who's that? Tolga. That's good. Still in position, closed partially. Great. Okay. I'm really happy that you got into that trade. Access to the recording. Yeah, I'll be posting it on YouTube and my. If you're not in my Telegram channel, by the way, I'm sure you probably are. But look me up. Jason Zen Day Trade Ideas. Here is the link. I'll put the link down here just in case you're not in there. That I also post. I'll post the link in there, the free one, if you're not a subscriber, so you'll be able to find it. Okay, that's Cable. Analysis on Euro CAD. Yeah, let me just see if that was one of the ones I was going to cover. Euro CAD. I will look at that for you in a minute, but I'm just going to show you. Is there anything else I want to show you just in that list of trades? I should really just have a quick look. I should look at Euro Yen. No, that one hasn't triggered. New Zealand dollar, Japanese yen. That one's actually. So look, I think that one's working. Oh yeah, I should look at that one because it's triggered. I should at least look at that for my subscribers. Okay. Again, a tricky one. Longer term chart is just. I mean, does anyone have any clue what is going on with this pattern? Really, really tough. Now, on the weekly chart, that's the main reason that I actually chose this trade, because of the weekly chart. So again, this is a reason why you've got to look at stuff like this. I think it's actually the monthly chart. if I remember correctly. Was it? No, that wasn't it. Hang on a sec. Let me refresh my memory. I can look at it on the weekly chart that you can't see, and I can remind myself rather than breaking down the whole weekly chart to start all over again. No. Okay, actually it was from the daily chart that I got this. Okay, so we were just entering the upper end of the range, I think, which was why I did it, or was it from a shorter term chart? Oh yeah, this again, it was actually just the hourly chart. This is how silly it is. I can only get trades from the hourly chart. That's not what I normally do. But I literally just saw this channel, moving averages. I just thought that we could probably turn around from this area. And I got lucky, really. This is such a weak argument for a trade. That's the truth. This is how desperate things are. 89.25, 89.35 was my sell level, and my stop level was above 89.50, and we just held below 89.50. I think the high was 89.48. Yeah, so again, I got a little bit lucky on this. It was a bit of a stab in the dark, and we've only drifted down. That's the truth of it. Let me see. At least this trade shouldn't be too affected by the CPI number, because obviously it's not a dollar trade. 89.00, 89.70. I mean, my targets are pretty close because I wasn't confident of a big move. 89. Have we even got to 88.70 yet? No, we haven't. We've got to 80. We've got very close to 89.90. 89.00. We got to 89.00. So we got to the first target. So yeah, this is the struggle that I'm going through right now. I'm really. It's difficult to find trades. Look. We've really done nothing since the 6th of November, so for over a week we've barely moved. Where are we now? Okay, so I've been asked to look at Euro, CAD and Dollar Yen. I will do that for you. Okay, let me try to get to the longer term chart. Okay, again, guess what? Sideways, sideways, sideways. Yeah, I know. It's probably too much data. Okay, so going back a year, there you go. What can I say? It's absolutely obvious that this is yet another Forex pair that is just in one enormous sideways, choppy, nothing. You know, if I look at that on the weekly chart, it's going to look even more sideways. The moving averages have flatlined. This is the daily chart. And the moving averages have flatlined for 2.5 months. And this is what happens when to moving averages when we're in a sideways trending market. They all converge and they all move towards each other and go flat. So if you're ever not sure about what trend we're in, go to the daily chart and just have a look at your moving averages. It doesn't even matter what time periods they are. I use the 50, the 100, the 200 and the 500. And they're quite long-term moving averages. I mean, most traders wouldn't use that longer term because they're going to be more active. So if those moving averages are flatlining, you know that this isn't a long-term sideways trend. Again, if you ask me what should you trade here, I haven't got a clue. That's really not helpful, I know. We're heading up towards the upper end of the range, July and August highs. Is there any reason for me to suspect we might turn around? I mean, we've been overbought now for, look, we've been overbought since late October. We've been overbought for 2 or 3 weeks. So relying on that wouldn't have been very helpful. I need to say something positive and give you some inspiration, but I just don't really know what to say. Okay, again, it would have to be the short-term chart. I would have to isolate what's gone on since the end of September. We're in a bull trend, so that's what's going to be important to me. This is a trend that is worth trading and following. So yeah, okay, I have got something here on the hourly chart. This is something I can work with. Okay, we rocketed up. These Fibonacci levels, now this is when Fibonacci levels aren't really going to matter. I'm afraid, because we're in such a good run that we're probably going to continue higher. So I'd have to keep putting my Fibonacci levels on. So I'm actually not even going to bother putting them on. They're a waste of time. I hope you understand that. The only thing that's going to really help me now are some trend lines and the moving average. The moving averages are great when the market is trending up like this. If I'm looking for a buy level, I'm going to litter the chart with trend lines. That's when these come into play for resistance as well as support. We've got a really nice channel there actually. Look, the upper and the lower trend lines are quite parallel, so that's quite good. Now I need to zoom in a bit and try and do something else with some trend lines. So I could certainly say that this is a triangle consolidation that we had here. Could I? Yeah. Yeah, it really is a case of littering your chart with trend lines when you've got something like this. If we were in the middle of a consolidation like we are here, then I could put some fibs on it, say, okay, let's try and find some retracement levels, but there's no point in doing that. I hope you understand that. Okay, so right now, this is what matters to me. We're in a bull trend, so I wouldn't be short. There's no reason for me to sell it right now. I would either, well, the only thing that I can suggest, the only safe trade that I can suggest is hope that we pull back to this trend line, the break point. You can see just from the candles on the 1 hour chart, you see how they were so small here. We had no idea what we were doing. And as soon as we broke up, we got a bigger green candle. We got a retest of the break point, the trend line, and bang, off we go. So if you were trading this market, all you needed was that trend line. You knew we were in a bull trend. We were holding nicely above on the hourly chart. The 100-hour moving average was a beautiful little support line. Every time, if you bought it 1, 2, 3 times on recent tests on the consolidation, then you did well. So that was pretty simple. How did the moving average fare? The 100 moving average fare? Yeah, I mean it's been a pretty good support level all the way up. Broke here, obviously. It wasn't perfect. There were times when it didn't work. This was a nice little bull flag actually that you could have traded. Look. I would suggest that would have been a nice little bull flag. Can you see that? Oops. This was pretty much a textbook bull flag there. The upper trend line, lower trend line, and then bang, once we broke, retest of the trend line and the 50-hour moving average, and bang, off we went. This is the kind of market that I like to trade. This is the kind of market that just makes sense. It's easy. The moving averages tend to work. They back up with the trend lines. I bet if I put a fib level on there, it probably would have coincided with something. Look, that would have worked. Yeah, not too bad. The 23.6% fib, we did overrun it. Maybe that would, yeah, no, that wouldn't have worked if I'm honest with you. Let me see, what was the low of that one? 48. Yeah, no, actually that would have worked. I had a support level at 146.08. So buying in around 146.20, 146.00 with a break below, with a stop below 145.80 would have worked. We got to 145.84. In fact, I'd be surprised. I probably had that trade on, did I? Does anyone remember that trade? That looks like the perfect textbook trade to me that I would have done. And then off we go. Okay, so Eduardo, I am really showing you how I do stuff with trend lines and moving averages. I hope this is helping you. Right now, on the downside, I would be a buyer at around 147.80, 147.60, stop below 147.50. That's just a beautiful area to buy into, but it does look like we're just going to continue higher. I've probably said enough on that pair right now. Any more questions? Dollar, yen, yeah, let's do it. Dollar, yen, okay. Right. Dollar yen, I don't know what to do with it right now, and I'll explain why. You could bet on a double top if you fancy it. This could definitely be a double top. Right, that line looks, that horizontal, that is a perfectly horizontal line. So what's the 151.94 if I remember correctly? Yes, I do. Today's high is 151.92. So if you want to bet on a double top, now is the time to do it. You've got us retesting the October 22 high. That's on the weekly chart. you can see, just scrunching it all up, we've been in a real nice bull run from 2011. Okay, so we are in at least 12-year bull run. Now, is that the mother of all double top patterns? Well, it's not going to cost you much to find out, is it? If you sell it now and you put a stop in at, let's say, 152, give it some leeway. Say you put a stop in at 152.20. Just give yourself 25 pips above the previous high, because even if we touched that level and then turned around, I could still count that as a double top pattern. So if you sell it now at 151.70, which is where we are trading, you're going to have a 55 pip stop, and you could be betting on the mother of all double top patterns. Now, if we break higher, you can try to reverse into a long, because it probably means we're going to run off. But right now, you could be hoping that the Bank of Japan says, no, we don't want it any higher, and the Bank of Japan does intervene. There's been speculation that they're going to intervene and stop the slide in the yen. Maybe they're gearing up to do it as we speak. I don't know. Be interesting to know, wouldn't it? That's all I can say about the dollar yen. Either this is the mother of all double tops, or we're going to break up and we're going to have another significant move to the upside. So it's a case of roll the dice, and if you're willing to risk 55 pips, you may have a really nice trade. You know, if I put my fib levels on here to look for some targets, I'm just going to take that little swing low here, because that was when the big move started. So let's have a look at some downside. To how sexy could this trade be? Well, of course, the double top isn't confirmed until you break the neck of the double top. So 127.21, we have to break below that before the actual double top is even confirmed. Now that means we have a drop of, what would that be, 2,500 pips, isn't it? Is it that much? Blimey, yes it is. Oof. Okay, so the actual measured target, if we break below 127.20, would be another 25 points off that, so it would be down at 100 and, well, it'd be down here. It'd be back to where we started. So I don't know. That really has the potential to be an enormous winner. I am doing my maths right, aren't I? I can't believe that's actually so big. But that is 25 points. So that would actually take us back down to exactly 102, exactly back to where we were at the beginning of 2021. Okay, it's a massive pattern, and as I say, we'd have to break down below here. If you want to bet like £1 a point, bet 55 quid, go away and come back in 2 years, you might have an enormous profit if we were to drop 150. Well, that would be that's 50 points. That's 5,000 pips. I'm doing that right, aren't I? Yeah, 5 with 3 zeros. I can't quite believe the numbers are that big. That would actually be 5,000 pips if we dropped over the next 5. If that pattern played out. Okay, you see what I'm saying, don't you? I'm stumbling with the numbers because they're just so big, but that actually is the case. There you go. That could be a huge trade. Right, that's the dollar yen. Aussie Swiss. Here we go. If anyone does that, come back to me in 2 years' time if you make 5,000 pips and remind me of that trade, please. Aussie Swiss. Right. Weekly chart. The weekly chart, we are clearly in a bear trend. Where do I want to take my Okay, whoa. I need to go to the monthly chart. Right, the Aussie dollar has absolutely collapsed against the Swiss franc ever since 1970. So, anyone in any doubt of what trend we are in the longer term? No, I don't think so. I should actually put some trend lines on here while I've got this massive chart up there, because these trend lines are really important. If we ever get near there again, which I very much doubt we will, that would be the mother of all sell opportunities, wouldn't it? Look. Now, that trend line there is a beauty. Now, I wouldn't normally have gone back that far. I'm really only doing it for this webinar. But look what I would have missed. Now, this is mega important. I'm actually going to put that line in a different colour so that I actually remember how important that is. I'm going to put it in a I'm going to make it thicker, and I'm going to put it in red, because I might forget on the daily chart that I've actually got that. Okay, so I need to remember that this is a really important trend line. Now, you can see that on the weekly chart, I've already got some fibs on there. They were on already, weren't they? Yes, they were. Okay. Now you can see if we get anywhere near 59.90, you absolutely have to sell the Aussie versus the Swiss. I'm not saying we will get there, 59.90. So that's 250 pips nearly that we would have to rally. It's not impossible. That certainly would be probably one of the best trading opportunities I've seen for a very long time. On the daily chart, let me just see if there's anything that I could make of note. Any trend lines that I should probably put in there. Yeah, this one. Okay, that's a beauty. Look at this level. Wow, I really hope we get up there. The Aussie Swiss has got so much resistance up there from that trend line. This trend line, the three trend lines that I've got on there, I mean the 200-day moving average in hours, 200-day moving averages plunged through that level. There is so much pressure to the downside for this pair. I don't see us getting there. What can I tell you now? If you are trading it, then what is relevant is going to be this triangle here. Probably should flick to the daily chart and just isolate that triangle going back to June. Sorry, the hourly chart. Let's go to the hourly chart and isolate that pattern going back to June. Probably should have really done it on the 4-hour chart. But anyway. Okay, here we go. Trend line. Trend line. Now this doesn't really help us right now because we're just in the middle of no man's land, as you can see. Let me put some fibs on here. See if it gives me a better clue. No, if you said to me, if you put a gun to my head and said you've got to buy or sell this, I really wouldn't know what to do, and you can see why. We're in the middle of this triangle pattern. This is a wait and see market. Can I do anything with it? I really can't. I just can't. No. You know, I would sell it up around 58, 00, 58.20 and see if we hold that trend line and the fib level. And that's all I can say. Sorry, I wish I could say more. I've done my best, but I just can't make sense of that. Right, any more questions? No. Okay, so in that case, how long have I got? I've only got 10 minutes. I'm going to just quickly work through some more of these trade ideas. Has anyone else in my group got these positions on? Now, oh, by the way, if you're wondering what these are at the bottom, and Rick already knows about this. Hi, mate. Because of these desperate sideways markets, I'm getting so bored of them, and as you know, I'm struggling with them. I've been working on some Bollinger Bands on my 4-hour chart, and I'm playing with the parameters to see if I can use Bollinger Bands on the 4-hour chart to identify more trading opportunities in these sideways markets. I'm throwing trend lines on there like you've just seen me do. The moving averages are of no use whatsoever, so I'm trying to combine trend lines and trend lines and Bollinger Bands to try and find trades. Now, I've noted some trades down here. I haven't put them out to the group, and I don't want you to trade them. These are just for my own notes, but I'm just letting you know that I'm trying to work on something else. Earlier in the year, I tried Bollinger Bands, and they just didn't work, even in sideways markets. But the sideways markets are so well established now that I'm trying something new. I'm always trying to try something new. I'll let you know how I get on, and hopefully for my subscribers in a few days, I'll have figured it out, and hopefully I'll have some trade opportunities. These will be more of a scalping trades. These will be more short-term trades. They won't be the usual trades that you get where I'm risking 25, 30 pips to make sort of 40, 80, 100 pips. Those are the kind of trades that you're used to me doing. These will be more risking 15 or 20 pips to try to make 50. Still, the risk reward will be the same, and they may actually be better trades, because it doesn't matter whether you're risking 50 to make 15 to make 50, or whether you're risking 30 to make 100. Of course, the ratio is still the same, and those trades might actually turn out to be better trades because you might get the profit in more quickly because the targets aren't so far. So this is something I'm working on. I need to master it. going forward, because I just right now don't see the much chance of a breakout. I don't think. When I'm showing you my trade sheet, can you actually see it? I bet you can't. No, you probably can't. Anyway, you know what it looks like. I'm just thinking, when I showed you my Telegram groups, you couldn't see that either, could you? Because I'm only sharing one part of the screen. Okay, there's a suggestion from Chris if anyone wants to read that. He's suggesting 0.382 deviation over 50 periods. Okay, I'll try that. Thank you. That's helpful. Okay. Anyway, I did put the link in the chat box, didn't I, for the public Telegram group, for the free one. Right. Anyone else got a market you want me to look at? Otherwise, I've got to look at the euro US dollar. It's one of the biggest pairs, isn't it? And with CPI coming up, let me try and give you an idea of what could happen if we get some movement in the CPI number. Okay, so in case you want to trade it, again, need I say more? I mean, look, going back, euro really has been in more of a sideways pattern since 2015 than any trend at all. You know, we are actually trading where we were trading in 2015, so this has not been an easy market to trade. It's one of my favorites. I mean, I feel obliged to find a signal in the biggest currency pair in the world. But even when you look back to December 22 or even November 22, look, it's just been one big sideways thing. This is why I haven't had many signals in the euro versus the US dollar. And I hope you'll forgive me for that. What do I think? What can I say at the moment? Well, I'm going to go to the hourly chart because the daily chart really is giving me nothing. Again, moving averages are all flatlining and converging, and that is telling me ignore the moving averages. They're just not going to work very well, you know. So I have to go to the short-term chart, and I've been studying my Bollinger Bands on the 4-hour chart on this pair too, because it's just so sideways that I've got to figure something out. Now actually the trend lines on this chart have worked well, particularly here. Now you're going to ask me, why didn't I put these trades on the sheet? I just didn't have enough confidence in them, but the trend lines are actually holding. Now look, we've got a break to the upside. So on the hourly chart, this actually looks pretty positive. Of course, it all depends on the CPI number, but we've broken out of this consolidation, which goes back to the beginning of the month. So it's only 2 weeks old, but it's certainly a pattern that has worked. You've seen, again, like we saw earlier in another pair, the candles got really, really small as they tested the upper trend line, and then we got the break, and suddenly the candles have obviously expanded because people are seeing this and they're jumping on the trade. We even got that beautiful retest that gave you the perfect opportunity. I mean, it would have been a pretty easy trade to take, buy on the retest, and then stop below, for example, the 23.6% fib, which is at 106.83. You could have had a stop in at 106.75. You could have been buying it at around 107.00, 106.90. Really small risk. And if you got into that long position, well, we'd now be running up. It's not the kind of trade I put in the Telegram group, because it's just too much of a short-term scalp. But if you had got on that trade, we're now above this peak here in the euro versus US dollar. We're above we're trading, we have beaten 107.25. We're just about holding around there right now. But it looks to me like we could easily get to 107.50. I mean, it's only 25 pips up. But that could have been a 3-to-1 risk-reward trade if you put that on, if you were focused on the 1-hour chart. That's all I can say about that pair. There isn't much else. US dollar yen just triggered. Okay, so you've actually jumped on that, have you, Chris? You've actually jumped on the sell, have you? Or are you telling me we've just burst up? Oh, I see. Okay, yeah, we were pulling. No, dollar yen. Okay, well you've put the trade on. I guess that's what you're saying. Okay, we've got 5 minutes left. Any questions? Any questions just about trading? You've sold it. Okay, good luck, mate. I think the risk reward is there. I think you've got to try it. Any more questions? Oh, someone asked me earlier. Sorry, who asked me? Germany 40. That's the one I've not done. Let's finish up on that one. Okay, the DAX 40, Germany 40, whatever you want to call it. Guess what the longer term trend is? Yeah, you guessed it. It's mostly sideways, but this is actually a really interesting pattern. Now look, we are in a bull trend. I mean, stock markets are in a bull trend, multi-decade bull trend. Okay, so when I go shorter term, now look, this is very interesting. I'm going to show you here. We had something along the lines of a head and shoulders pattern. I could argue maybe that this was the left shoulder or this was the left shoulder. I'm not really sure. Or maybe this whole thing was the left shoulder. Then we had the head, and then we had again some sort of double right shoulder. We broke the neckline and down we went. We got to the 500-day moving average and we bounced, and we got to close to the swing low in March and bounced. Now look.
The webinar has ended. Thank you for joining. Goodbye.
Okay, I'm going to keep going. The webinar's ended, but I'm going to keep going for you guys who are still watching me on YouTube. Right, the DAX, the Germany 40. We could now be forming a right shoulder for the Germany 40. This could easily be a very nice little left shoulder. This whole thing up here could be the head, rounding top, whatever you want to call it. We've come down, we've tested the neckline, the 500-day moving average, and now we're building a right shoulder. Now, do we halt at the 100 and the 200-day moving averages on the daily chart around the 15,700 area? Do we turn around? Do we form that right shoulder? Do we then break below the neckline at 14,700? And do we then have a drop of the projection? The measured target would be, I'm not very good at quick maths. I used to be on the floor when we had to do everything mentally, and because we do everything on screens now, I don't have to do mental arithmetic anymore. Okay, you can only hear me. Okay, sorry. So now my theory is that maybe we'll turn around here, we'll come down. And if we do break 14,700, we basically got the best part of 2,000 points to the downside, haven't we? That's from the peak of the head and shoulders pattern to the trough. So that could be a 2,000 point drop. What a phenomenal trade that will be. It's definitely something that I've got to watch. Okay, that's it. Thanks for joining me. If you're not a subscriber, sign up. Don't miss the daily signals.